the diversity of the region that we're seeing out here in Asia is actually very much a strength to the strategy. And the reason for that is because of the complexity of the environment and the complexity of the situations that we're looking at, and ultimately all the different languages and cultures involved. It really throws up a barrier to entry. And what that means for us as investors is that actually the returns are higher in this region than they are for a similar strategy in, for example, the United States. And so not only are we getting paid more, but we have a competitive moat. There are not that many other people that are doing it, and therefore there is less concentration around positioning. Japan right now is seeing a lot of sweeping changes to regulation and rules that are really encouraging companies to draw value out of their corporate structures and sort of return value back to shareholders. For example, we're seeing a lot of reform around what the government has been calling the price to book reform, that is encouraging companies to explain to the market if they are trading below a price to book valuation. One, why the valuation is there and what they're doing about that. Japan is now the second busiest activist market in the world after the US. Japan is really emerging from a 30-year period of economic stagnation. And that's very important because not only are they seeing economic tailwinds in terms of growth in GDP, growth in wages, and good inflation. But the government is helping push this forward through reforms in regards to the corporate sector. And so all of these things are acting in concert to create really the best opportunity set that we've seen in 30 years. There's also a lot of value to be unlocked in Korea as there was in Japan. Price to books are very, very low. And in fact, we see Korean banks, as an example, trade at a fraction of the price to books of banks globally. So that's one spot that's very, very interesting. But also the chaebol holding companies, the chaebols being the family held structure that we see endemic in Korea at the moment. There's a lot of value to be unlocked there as well. Korea is a very different market from Japan. So ultimately it's going to be very important for the government to retrofit what we've seen in Japan and the policies put into place into a way that is palatable for Korean investors and for the Korean market. China is still the world's second largest economy and second largest stock market. So we're not concerned with the direction of the market, we're much more concerned about the corporate activity that we're seeing. And there's a lot of corporate activity that still needs to take place in China to rationalize and to clean up what we're seeing in terms of the property market. And so we're very bullish because we expect more transactions, more cleaning up, more rationalizations, and more restructuring. I think an important thing for us is that we can move to where the opportunity set is, and the universe is large enough where if we see risk, we can avoid it over a short amount of time. And that's very important. So whilst right now, Japan may be interesting, we can also move to India, which is an interesting space, or even Australia. And so the mandate is big enough and broad enough, both on a sector basis and on a geographic basis, to allow us to really go where the opportunities are.